Hey guys, Boris last week from BK Forex. Welcome to our daily technicals for 2/7/13, positioning ahead of volatility. As always, past performance not indicative of future results. Trading Forex carries high level risk may not be suitable for all investors. High degree of leverage can work against you as well as for you. And before deciding to trade any such leveraged products, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. And you should always be aware of risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information including commentary and trade ideas provided by pkforex.com should not be relied upon as substitute for extensive independent research before making investment decisions. We're merely providing this information for general information, and the information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. We will not be responsible for any losses incurred in investments made by traders, by readers, and clients as a result of this information contained on BK Forex LLC. We do not render investment, legal, tax, or other professional advice, and such advice is needed. Please seek professional confidence. Let's start with the Aussie today, although that's probably the slowest story of the day today because everything else is going to be shaping up as we go forward. But still, let's take a look at the Aussie today because the Aussie remains very weak. It broke, as we said yesterday, critical 103.50 level and has not been able to bounce back up above it. We had employment data out of Australia come out today. Top line number looked pretty good. It was sort of in line, but when you look at it underneath it, it looked like the key thing was that the full-time jobs were lost, part-time jobs were added. That's really not good for the Australian economy. And as you see, the Australian dollar really kind of faded on any kind of a rally into it. Right now, this 103 is the key support level. We've been testing it at 102.95 or so, and that's going to be the next level to give. If we take out the 102.90s, get into the 102.80s, that's pretty much going to open up the way towards the 102.05 test. On the other hand, 103.50 now is the new cap, and any rally is sort of could peter out around these levels as we stand. The really big cap, of course, the 104. That's a big overhead at this point. But as you can see, Australian dollar remains very much in distribution, still higher lows, haven't really broken anything to the upside, and a consolidation. A break, as I said, below 103, 102.85 opens a path towards a 102.50 on the Aussie. That's pretty much how we stand as far as the Aussie goes. Now the Euro, different story. Euro held 35 several times, and 35 now becomes big support level. As we see in the morning, we're having a big rally a little bit here in Asia, really off of no news, just a lot of short covering and probably a squeeze to the upside. But although 35 supports, 36 caps for now. This is really the new range. 35, 36, we're kind of bouncing around after this big consolidative move and a corrective move downward. A break above 36 puts us on a path towards a double top test of 137. On the other hand, if we kind of fade it out over here, we can just continue to range back 36 to 35. Those who want to take the gamble on trading the range, this could be an interesting trade where you sort of sell the 36s, buy the 35s. But personally, I'm still looking to see key levels here, which is the 37 broken to the upside, that would continue the trend, or the 34.50 broken to the downside, which would really create a benchmark corrective move as we stand. The other thing that's kind of interesting here is that if we fail to make a new high from yesterday, if we fail to break yesterday's high, that would actually set up a pretty negative construct on the euro, where you would have lower highs continuously over here. If this was the high, and it could then break us below 35 as the day progresses. So euro sort of in process of forming some kind of a pattern yet, but it's not quite clear which way we want to go. Cable also pre-positioning. Remember that the euro today is sort of really playing games ahead of the ECB. Once ECB comes out, you could have massive changes of forward here, and the key levels very much could come into play depending on how much volatility the euro gets. Cable also playing around here, took out the highs of the day, but they came right back down. Still looks very, very negative. This counter trend rally faded, and now we're holding the 56.50 level. This is really 56.50, 56.30 actually. The 56.30 is the key hold here. A break below 56.30 really opens up a way towards the 55.50s. On the other hand, the top side still curbing at 5700, and the next level of resistance is going to be 57.50s on the cable. So with cable, also very tight range, resolves one way or the other, likely to give us some directional clues. And the yen, surprises everybody. I think everybody's looking for the yen to kind of fail right now. 94 failed yesterday. It didn't hold it. Came back down. Did not take the 93s. And this is interesting. The fact that the yen would not come down towards the 93s is mildly bullish, which means we could make another run towards the 94s, take the 94s out, and possibly fade out after that. We'll have to see how the construct goes here. But for now, 94 is the operating reference point for a top. If we break down below 93.50, maybe the next run below 93.50 will open up a path towards 9300. For now, though, the yen looks mildly bullish, with this top operating as a key test of a double top. If we dip below the 93.50s, though, I think the next dip below 93.50 could really open up a path towards 9300, because that would be a failed top over here. And then a correction here could be much more steeper than most people think, because after such a big move up here, it's not going to be just by the first dip. It's probably going to take out 93s, perhaps even 92s, before you're going to get some sort of a decent rebound on the correction. So that's how the things shape up. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out.